Welcome to the Beacon 1% Better podcast, where we discuss how to get 1% better every day with your host, Chip Kispert. I'm RJ Malik, producer of the podcast. Chip, good to see you.
Good to see you, RJ. Looking forward to getting this great podcast going.
Yes, and I see you have a couple of guests, so let's not waste any more time. Why don't you take it away and introduce your guest and tell us what you're going to be talking about on this podcast?
Great. Today I'm joined by Kevin Knull and Browning Mank from TaxStatus, where they use IRS tax data, AI, and data science to support advisors' growth and investors' servicing strategies. Welcome to the show, Kevin and Browning.
Thanks, Chip.
Thank you so much for having us, Chip.
Nice to be here.
We're super excited. Kevin, your accomplishments are many, but you've led strong and built strong teams at Money Guide Pro, Truthify, Paradigm Shift, and Y Charts, as well as Symetra Investment Management. Browning, your body of work includes working with BDs, RIAs, family offices, and fintechs like Ackerman Capital Management, Forward Lane Inc., and Fidelity Investments to help grow their specific business lines. We are so excited to have you guys on the Beacon 1% Better Everyday podcast because you're doing some really neat things. And so let's get right to it. First off, Kevin, when I was looking at your background, I see that you attended the U.S. Coast Guard Academy. The journey from the Coast Guard to fintech and wealth management is fascinating. How'd that occur? I mean, it's got to be a great story there.
It's an interesting one. I served 3 tours after the academy, chasing bad guys in the Caribbean and saving some lives. And, after 9/11, about 9 months after 9/11, it was time to get out and move on. And I was just really interested in the space. And over the years, there were a few things that really served me well in the military, and that was, identifying really big problems, trying to find new ways to solve them. And early on, I identified while in the military that technology was the path to doing that. Although much like the trepidation around AI today, they were scared of using GPS and navigation to drive the ship because the navigation didn't care if you ran aground. Today, we're still arguing the same problem of, is AI going to be detrimental? But inevitably you have to take these changes. So for me, it was solving big problems and helping people. Service is still in my DNA, and I really was then, and I'm still very motivated by delivering better outcomes and kind of tongue in cheek way saving people. So that's what I'm trying to continue doing.
That's great. Well, growing up, I grew up in Massachusetts on the coast, and the Coast Guard was always the most highly respected body organization in the area, and the work they did was fabulous. Browning, now you won the Mary Blackburn Partner Challenge in May with your engaging story about TaxStatus, which really kind of stood out to me from literally hundreds of sessions that we've done. How did you come up with that storyline? It was absolutely brilliant.
Just from life, Chip. Thank you. I just high level, I told a story about dating because I haven't dated for 30 years and recently started dating, and really compared it to needing to have a service like TaxStatus to really help you get the right data before you go on a date so that you can have better outcomes with your dating if you only had more information. So I'm hoping this podcast will also help me get 1% better dates if we talk about all the right stuff.
Every day, though, 1% better every day. That means you're 7% better every week, right? That's great.
Yeah.
All right. So, we've kind of talked on some of the background, but, let's get to the big subject because we only have so much time. So, Kevin and Brownie, you all have a very innovative approach to helping firms with organic growth and advancing their service models with the TaxStatus platform. Tell us about that.
Well, if we kind of take it from the high level, we're trying to help firms solve a massive problem. And that is, how do you get the data you need to render, fiduciary and complete and robust advice when the clients often share the wrong information, don't disclose all the information, and we really need to help those folks get that data to do their job. We have a massive problem coming soon, and that is 110,000 advisor shortage here in the next 9 years as advisors move out of the space and a lack of new folks coming in. And about half of the CPAs are going to exit the business too over the next decade. So we're going to have a shortage of advice providers, and we don't have all the data we need, and we don't have new people coming in. The only answer is to help the firms get more data and then scale advice. That's what we're trying to solve for. And TaxStatus makes it very efficient and easy to obtain the data on behalf of the client with their consent from the IRS to in turn share that data back with the firm or their advisor to get the full picture. And unfortunately, most advisors still only have a third of the assets or half of the assets and probably less than half of the information, which means they're rendering advice on an incomplete picture. And my concern has always been, if you don't know all the information, you can't render a complete and robust recommendation. That's what we're trying to solve for.
That's pretty heady. That's pretty big stuff and pretty transformative. The numbers you threw out there are to me are staggering. I mean, those people going out of the business and where all those people are, the customers and prospects. I mean, who's going to pick those up? It's very, very compelling.
The great part about that, though, Chip, is that this creates such a massive opportunity, right? All of the firms are trying to figure out how to grow organically, not inorganically. And the simple and easiest way to grow organically is to get more assets from your existing clients. That's what we do, is we help them find the assets.
And that's a huge deal, as we've seen with our customers. So you also have had some recent huge news, right? You've added some impressive board members to the TaxStatus team.
We did. We recently added Eric Clark. Most everyone knows him from his amazing success at Orion. And we added Rick Edelman, who arguably is probably one of the most well-known advisors in the industry, who is the founder of Edelman Financial Engines. They both just joined us on the board, and we also added Randy Bullard from State Street as well on our advisory board. Who's, these three guys are just amazing individuals. They just bring so much brain power and are going to help us continue to innovate here going forward.
You are absolutely correct. They are three thoughtful powerhouses, and to have that type of advice, that's great stuff. Absolutely great stuff. So I'm shifting a little bit here. During our discussion yesterday, you identified kind of several challenges that the TaxStatus platform is equipped to address. Can we explore some of those in greater detail? We always like to try to, and even get into the sub question of saying, hey, can we hear some use cases? There's so many times we look at tech and they come up with these big sweeping kind of generalities. You guys have valuable use cases.
We do. So I would say the probably the most prominent one, both for clients and prospects alike, is identifying the held away assets, right? Getting the full financial picture. The IRS knows everything about every individual trust and business. And again, with that consent, we're able to go get that information. So consider the onboarding or discovery process of a new client or prospect. The alternative that's currently being used is fill out this 70-page data gathering form, give me the last 3 years of tax returns, go find all that stuff and upload it into a vault or scan it or bring it in the shoebox to me. And that's a terrible client experience. Or Mr. or Mrs. Client, you can take 1 minute, provide consent, and we'll go get this data from the IRS. And in that process, by the way, we'll also share with you what the IRS knows, and which is substantial. And so we can share that back and deliver that value. In essence, now that firm, the advisor now knows every dollar of income and where it came from, where all of the accounts are. They can identify missing accounts or accounts that the client forgot about, and get all of the information around all those other holdings like businesses and trusts and partnerships and LLCs and properties and mortgages and so forth. So I'd argue this is the most complete financial picture that is available, and it takes only a minute to get permission to share it.
Yeah, I'd add to that too, Chip, that to Kevin's point, you're going to get all that information. Just think about how you can enrich the data for existing clients. So as you get ready to do your next quarterly business review or the next annual review for them, really looking over that financial plan, ensuring that you've included all of that extra information, all that data to really render fiduciary advice and be up to date with that client. It also helps with prospects. So imagine if you know all of this going into a prospect meeting, you can really position your services in a whole new way and ask great questions of that prospect and spend your time really building rapport and a relationship versus trying to gather data and find the right angle to kind of go in and connect with them.
Got it. One of the other things, Kevin, I'll kind of build off both of your comments. Kevin, you initially talked about pulling those documents, having the shoebox, so to speak, or files, whatever, not the most secure, right? And not the easiest, you got to drift through that information. It's paper-based. If it ever gets lost, that's a huge issue.
That's right.
So super interesting to me. Now, the other thing, I test drove this probably 3 years ago, right? And it's really cool to pull down that information. It actually is fairly shocking at times what is there from my perspective. The process for getting onto that platform at the time wasn't the easiest. You've done some real work on integrating that into the advisor workflow and simplifying that process, I think, right?
We have, and we've got a number of different methods of obtaining the consent. That's kind of the hard part at the beginning, is getting the client or the prospect to share consent so that we can have the permission to go pull the data on their behalf. As soon as we get the consent, we can return the data via API back to the firm. But we've now got the process down to about 51 seconds. So you can send a link to the client, to the prospect, have them click the link. They can authenticate a number of ways, whether with their driver's license or ID.me and so forth, all completely secure. And so as they do that, it takes about a minute, and then that gives us the ability to go pull that data. So it really does eliminate just a massive amount of friction.
Yeah. And, the other, and building on Browning, your comment, how that weaves into workflows, whether that's a prospect or a client, like the data that's there is incredible. Again, I was kind of shocked by what they had when I pulled mine down. Let me shift gears a little bit. So normally, like when you go through the process, hey, this is how we're running our business. These are the expected use cases. What are some of the outliers that kind of delivered unexpected results that you've seen emerge from the opportunity TaxStatus platform affords to its advisors or CPAs or any of those folks?
Well, I'll share a big one, and Browning and I have been working with a lot of the big tax firms. Believe it or not, most CPAs today are still waiting for the data to come from the client, right? And a lot of folks probably on this call are still on extension, right, for last year's tax return. But the IRS already has just about all the data that you're ever going to give the CPA, right, other than the stuff they don't know about. And so we were kind of really surprised. We started digging deep with the large tax firms that they're still sitting on the phone and have thousands of CPAs on the phone every day on hold with the IRS, requesting tax transcripts and getting information one at a time. And what we've made possible, particularly for the CPAs, which is so interesting, is CPAs have what's called a centralized authorization file, or CAF number. It's like our CRD in our world. And they can plug that CAF number into our system, and we can pull down all the data for every single client that they already have under consent. And so for CPA firms who operate that way, right, they put a 2848 on file, it allows us to go and get all that data in bulk and update it daily if they want it that frequently, to be able to populate their systems, build their plans, and their returns and so forth. And so as I look at the bigger picture here, the opportunity and really the game changer, I think, for firms and CPAs, RIA firms, CPAs alike, is that everybody's been operating on what the client reports, but that's only a fraction of the information, and it's not the source of truth. The source of truth is all the other reporting sources that are sending the data to the IRS. It's the custodians and the banks and the casinos and the employers. It's all of these other folks that are reporting information about Chip that is now on file. The IRS is just waiting to see what Chip submits to see if you shared all the numbers. And then they just compare them and say, wait a minute, you didn't share all the information here. It doesn't add up. You owe this additional amount. And if you have too many of those mistakes, you might just get tagged for an audit. So, we don't want to see that happen.
No, but if it does happen, we'll be able to. Oh, sorry about that, Chip. If it does happen, you get flagged. If it does happen and you get flagged for an audit, we'll be able to tell you that ahead of you getting a letter in the mail, so you can get prepared. So our CPAs who prepared that tax return, they want to be ahead of any kind of audit. They want to know ahead of that client. They want to be proactive. Our RAs want to also do that to build affinity with the CPAs and the clients of just giving them the early warning.
That's a big deal. That's a big deal. I'm also happy that the IRS doesn't know me as Chip. So anyway, moving on. All right, Browning, question for you, because it kind of builds off what you were just talking about. So you're regularly engaged with wealth firms. What insights have they shared regarding tax status and its impact on their business?
Oh, great question. So at a high level, we've talked to large broker dealers to boutique family offices. I give a couple examples for some of the family office size, maybe a few $100 million of assets that they've run their clients through just to get a sense of what other size outside accounts and assets that they might have. And we've had one that's 300 million or so and assets, found an additional 3 billion in assets. And particularly as they look at businesses and corporate ownership and privately held, private equity and hedge funds and trust accounts, that's where a lot of the hidden wealth comes from. And it's not always something that your client's going to tell you a lot about because they don't feel like you can always manage that or need to know that, or it's too complicated for them to bring up. So they're just really showing you their investable assets at times, where here you get a full picture of it and can really see ahead of a liquidity event where you can help your client really look at risk in their overall financial picture. Large firms see that in spades. For them to be able to increase their share of wallet is huge. So they may only have 30, 40, 50% on the high side of assets of a client, and to be able to kind of double that opportunity and be able to really go after specific types of opportunities with their clients or certain and earn a larger share of wallet is huge for them. So they can see 100% more assets, 100 plus of opportunities that they can go after.
That's
Chip,
fascinating. Go ahead,
Chip.
Kevin.
Let me just add to that, because Browning just hit a really important point. We've all heard the conversation about the massive wealth transfer, right? We keep seeing articles about it. The real bulk of the wealth transfer is not going to happen because somebody passed down their little brokerage account to their kids. It's going to happen in the businesses, in the properties, in the trusts. That's where wealthy people keep their assets. And the truth is, most firms aren't paying attention to that. They wait until after the liquidity event occurs, and now they're all fighting with everybody else, trying to get their hands on those assets. It's too late. And, we've all seen the stats about what happens when the kids go to inherit that money. What Browning just mentioned is we can share where the businesses are and the percentage ownership in those businesses and properties and trusts before the liquidity event happens. So if you want to know where that transfer is going to occur, we'll show you exactly by percentage, by business, by trust, tied to each client, and you can be ahead of that conversation. And, I'd argue that is the single biggest opportunity over the next 10 or 15 years, is for those firms that focus on that, not on just trying to get another little, IRA. Yeah. It's and not find the businesses.
Yeah. Not to be scared of it as an advisor, be knowledgeable. And that puts you in the quarterback seat. They're always going to have other accounts or other advisors or other kind of trusted professionals in their ecosystem, you can be the quarterback for all of that by having this line of sight and being ahead of all of that and orchestrating it in a way that's going to really benefit that client and their family.
That's great. That's great. I'm going to shift again because I love to shift about every 45 seconds, it seems. So, Kevin, this is probably a question for you. What innovative functional add-ons do you anticipate for the roadmap for the next 6 to 12 months?
Oh, well, you're asking for me to share all the cool secrets. Maybe I'll be a little bit ambiguous here, but I'll tell you the direction. So I have, since I started in this career and became a student of the industry, have been always very concerned about we'll call it a perfunctory or lightweight analysis, and then the rendering of advice. And so we all know most of the industry started selling products and so forth and morphed into a real advice-based service. But it's kind of like going to the doctor. If if you're complaining about a chest pain, and you go into the doctor and the doctor only does a surface look at you and looks and spends the rest of his time waist down, he's probably going to prescribe the wrong medicine. You may have broken ribs, you may have a heart problem, but that amount of kind of diagnostic evaluation isn't happening right now. You don't have all of the information. And if I had to say, my biggest concern is that the clients are expecting us to render fiduciary advice when we don't have all of the information. And that it's impossible. It is an impossible ask. If you don't know everything, you cannot render complete and best interest advice because you don't know what else is out there. I don't care if the client has 3 advisors. That advisor that's building the financial plan needs to know where everything is. It's okay that he doesn't manage or she doesn't manage it all. And so I think this is where we're going is we don't want to have 1 or 2 or 3 tax scenario, evaluated. We want to evaluate all of them. We don't want to have 1 or 2 estate planning scenarios evaluated. We want to put in everything we can. And with AI and complete data, we're going to be able to change the industry, I think. And that's exciting because of the massive problem of the shortage of advisors. We don't have a choice. We have to find ways to do this. And we're excited to try and be part of that picture.
I love that thoughtfulness and that innovative thinking. I think it's fabulous. All right. So for our last question, right, it's kind of 2. We're actually going to step away from talking specifically about tax status, right? But we like curiosity here. So in the context of wealth management, what are the developments or trends that you're most interested in moving forward first?
I think it's AI and really improving the overall ability for you to be an advisor, taking some of the busy work out of your day, making your life easier, making your ability to give advice in any profession more scalable, getting you good ideas to kind of jumpstart your own thinking as you're presenting either to a client or a solution that you've really taken the time to engage with that data and see that you're really rendering the right advice for that client. And whether it is as a financial advisor or as a doctor, a teacher, any profession, I think every profession is going to be impacted by that. And it's how you use it that's going to make you better if you can embrace it and really and trust but verify. So you want to make sure that you're not getting hallucinations and getting made up data, but you're starting from a much higher place than where you were before it.
Got it. Kevin?
So I have this vision that advisors in the future are spending 90% of their time talking to the client, paying attention to them and managing behavior and doing the things that they need to do that the computer isn't going to be able to do in the same way. And only 10% of that time is being spent evaluating scenarios, making decisions on which one is best, and so forth. It's going to be the combination of better data, better AI, and leveraging that information, that data to leverage both AI and programmatic arithmetic, reasoning around it, because AI right now cannot do math. And then couple that with the human advisor and that ability to layer on the human element on top of the data, on top of the AI, on top of the programmatic analysis to create a really just a better client experience. And I'm seeing it right now with physicians. Next time you go to the physician, you will notice the physician is spending almost all of their time looking you in the eye, talking to you, understanding your situation, and not writing notes and typing things into the computer. They're just in their infancy of it. I think we are too, and that makes this really exciting to me.
That's really cool. Last question I have is, we're students of the business of the industry. On a daily basis, we're talking to 5 to 10 either wealth firms or providers out in the industry. Which provider firms in the wealth management business have you observed demonstrating really notable innovation recently in your mind?
I was going to say you, Kevin. I have brains on something.
And you can't be self-serving. Sorry.
Yeah.
All right, I'll go first. So, we all go to the same conferences, whether that be, the industry conferences and the firm conferences and so forth. I see a lot of very interesting things. I think there's a little bit of a glut right now, though, because so much is being focused on efficiency, like AI for, workflows, and it's great for that. And I think there's a lot around using AI to do research and serve up information. But I would just caution everybody in that, go and test, ask Copilot how many R's in Raspberry and see, and then do the same with the others and see what the answer is. Like AI is just in its infancy right now.
Right.
And so what I'm seeing a lot of interesting conversations. I'm seeing a lot of folks just scratching the surface, but I think everybody's trying to figure this out now. Anybody who says they're an AI expert, I say, you haven't been doing it long enough to be an expert. I mean, I've been doing it since 2017. I don't consider myself an expert, but, I've learned a lot and we continue to learn a lot. So, ultimately, I think, the firms that are going to get ahead of this and get outside of just thinking about AI for workflow and efficiency and start using it to really leverage the enhancement of the data and the enhancement of the research, and then help you start thinking about, I think there's going to be a point that the AI is going to be telling you, here are new tax strategies. Here are new ways to write a trust. Here's a law that makes sense, right? I think that kind of stuff is coming, but we're just not there yet.
Yeah. And I'd chime in to just say, I think it's the firms that are doubling down on the human component. And how do I make connections with my clients in a stronger way? How do I make connections with that second and third generation? How do I bring the family together? And things that look at the wholeness of a person. So it's not just your financial picture, but it's your health, as you think of health and wealth together, and doing some things that really acknowledge that you're bigger than just the dollars in your bank account, that there's a lot more, that it's some priorities and importance to you. So just being able to make those connections, there's technologies we just brought on an Advisor Pro or something that comes in and tells you all of the interests of a client, their LinkedIn profiles, what did recruiting do before LinkedIn came in? I think that there's no way to connect, but now we have so many ways and so much information and data that we can truly connect with our clients. And that's going to make for a much better relationship and a much better outcome for them long term.
I think we all believe that it's important to be able to serve the client better. So, hey, as we're wrapping this up, one of the things we always like to do on the 1% Better Everyday podcast is have a blast. So you have 45 seconds to share a thought leadership topic that you believe is insightful to our wealth management centric audience.
I can do it less than 45 seconds. how are you ever going to be able to render a fiduciary recommendation without having all of the information? I don't know how you're going to be able to do it. And I think everybody should take pause and consider, what is the risk of not knowing that information, of delivering a bad client outcome? It's very, very high. And so I challenge everybody to go back and just give some thought to that. And, it may challenge you to rethink some of your processes and, and standardize some things in a way that maybe, puts you in a better a better position to deliver those better outcomes to your client.
That's great.
So we should have coordinated.
All right, Browning.
Because I was going to come up with the same, but I will echo that then. And I would just say, don't be scared of being the quarterback. Be the fiduciary that your client expects you to be. Ask the right questions. Ask them to do something as simple as take 3 minutes to, go through this link that's going to give you access to information. Don't be scared to ask your clients for access of that information, because they're going to readily give you tax returns in a less secure way. All that tax data gives you is a bunch of information. We're going to have it in a much more digestible way for you. And just as a callback, I would say, your clients aren't going to give you all that information up front. They don't remember it. They don't know if you're going to use it or how you're going to use it. So to really have it's going to make you 1% better for sure. And start dating your clients with more information than less information.
Got it.
You'll build a better relationship.
I love it. Kevin and Browning, thank you for joining me on the Beacon 1% Better podcast and sharing your valuable insights. Wow, some of the things I took away from our conversation were just so impactful. Before you go, how about you guys giving us your contact information?
Oh, sure. My gosh.
I'm Browning at TaxStatus.com. And is that what you need?
Her mobile number is 972. No, I'm not going to give that.
My profile app will say a different name.
I love it. RJ, I tried to jump the shark there.
Yeah. I heard that.
It's real easy. Our emails are just our first name at taxstatus.com. So you can get us that way.
That's great. That's great. Thank you very much for joining us. Till next time, I look forward to talking to you.
Thank you so much, Chip.
Wow. I really enjoyed that conversation. Kevin and Browning shared some terrific thoughts on organic growth and how to better serve the investor by using tax data. So powerful. As I wrap up our podcast, I encourage you to check out our recent talks with Dave Goes from Advison and Mike Overdorf from Sycamore. Lastly, we here at Beacon encourage you to get 1% better every day. And to quote Walt Whitman, and most recently Ted Lasso, be curious, not judgmental. Until our next episode, this is Chip Kispert. Be well.
All right, Chip, and we need to add in a shout out as this podcast is brought to you by Beacon Strategies, LLC, the go-to resource for roundtables, consulting, and services that support wealth management firms and their providers. If you need some industry perspective or help, please visit beaconstrategiesllc.com. Thank you for listening to the Beacon 1% Better podcast. We ask you to share this podcast, rate it, and leave a review, because this actually helps others find the show. Again, thank you for listening, and for Chip Kispert and everyone at Beacon Strategies, I'm RJ Malik, and we look forward to you joining us for our next podcast. Thanks for joining us on Beacon's 1% Better Everyday podcast. Be sure to hit that follow button so you never miss an episode and stay up to date with Chip and his friends' latest insights and strategies. If you want to learn more about Beacon Strategies or get in touch, visit us at beaconstrategiesllc.com. Remember, progress starts with just 1% every day. Let's keep challenging ourselves to be curious and grow. The information covered and posted represents the views and opinions of the guest and does not necessarily represent the views or opinions of Beacon Strategies. The content has been made available for informational and educational purposes only. The content is not intended to be a substitute for professional investing advice.